Heard something scary on the last Tax Tuesday. Well, it was close to Halloween, and I was trying to scare everybody.
Good job.
I wanted to follow up to ensure that I wasn't doing something terrible on a flip. I'm scheduled to close next week. What I heard, if you get identified as a real estate dealer by the IRS, you get taxed on 100% of the gain on the sale of the property in the first year, even if selling on installments. Well, all right, so if you're a dealer, then you do not get something called installment sale treatment. Is that 475?
I think so. Yeah.
Yeah, I think it's 475. Actually, I could probably type it in here and go, oops, I don't know how to type without a typewriter. It's 475, I'm reasonably certain. But what it says is that there's an exception to being able to designate something under the installment sale method. So in other words, installment means I'm taking money over time. So if I sell Jeff my house and I say pay me over 10 years, then I am electing to treat that as an installment sale. Then I am receiving that income over 10 years. And it's a great way to defer the tax out into the future. Now, if you hold inventory for the resale to customers, which is what a dealer does in real estate, I'm buying real estate, I'm holding it for as inventory, and I'm selling it. I buy property with the intent to sell it. I do not get to take installment sale. Did I pick the right statute?
Yep.
Right.
No, wrong statute.
Oh, which one is it? 445.
475 is mark to market.
Darn it. All right, so I'm thinking about traders. What's installment sale? I'm going to trip myself out here.
It's not participating.
I'm going to find out. I'm going to drive myself crazy.
453.
453. So that's the installment method. Too many sections, both running around in my head. So 453, and the exception to that is the dealer. So here's why it's really bad to be treated as a dealer. If you're doing this, you are taxed on 100% of the gain the year that you sell it. So in real life, I'll give you a real life situation that happened to a client, is they bought a piece of property for about $4 million. They were going to develop it and sell off the pieces. And somebody comes in, and this was actually in 2007, and says, hey, I need that land. And they said, well, we don't really want to sell it to you. And they said, how about I give you $7 million for it? So they're like, oh, wow, a $3 million gain. And they said, but we're going to pay you over time. And they said, good, because we don't want to have to pay tax on all this money. And of course, think of the timing of it. They never got a dime on the sale. And the IRS taxed them on the $3 million. And then they said, but they defaulted. The land ended up not being worth half of what we paid for it. All these losses, all this stuff. And the problem was, it didn't matter. The taxable event happened the day that they sold the property to the guy for $7 million. It took them 2 years to figure out the project was down. In that 2 years, there was interest and penalties on that non-reported $3 million of income. And so they got slapped around very hard. They eventually were able to write off the debt, having reasonably tried to collect it as bad debt, but that took till year 3 after the sale. Then they were able to carry back some of those losses, but it doesn't erase the penalties and interest, and they ended up out about $300,000 that they never thought in their accountant completely missed. So when they came to us, they were like, oh, what do we do? And I said, well, there's nothing you can do, except, we got them right when they were trying to collect on the note. And I said, you have to use reasonable methods to collect the note, and then you have to write it off as business bad debt. And the accountant had dropped him, of course, because he was scared of getting sued. Anyway, so that's dealer. Now, being the president of the S-Corp, you may be able to be a real estate professional. Does that matter? The answer is no, unless you have losses. Real estate professional status only matters if you are taking massive amounts of depreciation on properties and creating losses, because then you can offset your ordinary, your active income, your W-2 job and everything else with those losses. But in this case, would not matter. So how should it be carried out in the future? Don't do installment sales on flips, because you're not going to get that treatment.
Right.
It's going to be denied. So if you're going to do this, I wish I had an easy method for you. What you may want to do is fix the flip, sell it to something that's going to be owning it for a longer term period. That's an investment company. Like, you're going to have to be disciplined about it and hold it for years, and then sell it on an installment sale and let it season. Otherwise, don't do that installment sale. If they need financing, have them go to a bank or have them go to another lender, because you are paying tax on 100% of that regardless. And if anybody tells you differently, I'm just kidding. They're wrong, flat out, simple. You can go read the statute. It says this is not available to people that hold it in the ordinary course. You can go read it yourself. 26 USC, and what do you say, 453? So anyway, fun stuff. So I'm sorry I scared you. Hopefully we're lessening the beating you're going to take tax-wise. And if you are getting beat tax-wise, it means you're making money. It doesn't mean that like this is horrible. It just means you're not going to pay tax in the future on that money as you receive it. The only money you'll pay tax on is the interest that you're earning on that installment note, because you're going to pay all the tax this year.